Welcome to the Masterclass Sessions by the Feminine Network, a conversation series for women in business who want practical insight, real support, and honest conversations that help them grow. I'm Lia Skye, and in each session, I sit down with inspiring women to share wisdom, tools, and conversations that can genuinely support you in business and life. Today, I'm joined by Sofie from Numbers Local Bookkeeping. We're talking about the financial side of business in a way that feels clear, grounded, and easy to understand. If your books, profit, or numbers have ever felt confusing or overwhelming, this conversation will help you feel more informed, more confident, and more in control. Sofie, I'm so happy to have you here.
Thank you so much for having me. So, a little about myself. We're here today to talk about stop paying yourself last. My name is Sofie Wilkinson. I'm a registered BAS agent bookkeeper located here on the Sunshine Coast. I have over 20 years experience within the bookkeeping realm, accounts, all of the good things. I myself am also a small business owner, not just the practice. We also run a trade painting business here on the Sunshine Coast, an Airbnb business, and I used to have quite a large e-commerce business as well. The thing that I am most passionate about, and the reason I'm here today, is helping small business owners really understand their numbers and get paid what they should. I see it a lot inside my practice and friends and everything else that people just don't pay themselves properly. So here today, we are going to discuss that and find some ways that you can work that out for yourself. Obviously, everything in this presentation is general advice only. I do suggest that you get tailored advice for your specific circumstances, especially when it comes to tax and all those good things. So the leftover method, this is what I see a lot, and I would say over 90% of businesses that come to me. The leftover method, like I like to call it, is basically the money comes in, whatever's left in your account after you pay some bills is what you get to take home. Realistically, those numbers never really align to what should be left in the business. And often things like tax is not paid or accounted for, and it can get people in pretty big strife. So this is what we're going to look at today. A lot of people will be in this situation, and hopefully we can find a better way forward. So again, why this happens, it's based on guesswork. There's no clear wages, what you want to take home. We need to account for things like costs, tax, buffers. Buffers is a big one. A lot of businesses don't leave money for rainy day funds. What happens if you have a week of unexplained expenses or sales drop or something happens? So I do like to ensure that people put a buffer in there straight away and choose your pricing before you know what your costs are. You have to be able to work those things out first. It's not a matter of picking a number and then hoping everything else fits. It's definitely knowing what's in there and then making sure that your pricing actually fits into that. So the way that I like to start this is, what do you want to take home? Now, this is going to be different for everyone. It's not a one number fits all. Also, this number may change. If you're just starting out and you don't have many clients, or you're a product-based business and sales are only a couple a week, this number needs to be realistic. You can't go in there and say, I want $10,000 take home, and you haven't started yet. Let's pick a realistic number, work with that. This number can evolve, it can change. And as your business grows, you want to see this number growing too, but we need to start somewhere. So I really want everyone to just think about that number in their head, whether it's $500 a week, $1,000 a week, $2,000 a week. Have that number in your head. What number do you want to take home in your pocket and make sure that you actually get paid? We'll use this number later on, and I will show you how that works. So what your pricing needs to cover. One of the biggest things I see here is true business expenses. A lot of people will run off rough costs, maybe estimates, but what we really need to work out is your true business expenses. I want the tax. If you've got employees, that includes your gross wages, your superannuation. It includes all of the expenses, your subscriptions, and I see this a lot with the tradies. They sort of go, oh, well, one bloke is $40 an hour. And it's like, no, he's actually $40 an hour plus super, plus travel time, plus breaks, plus everything else. And that's going to be the same for all these expenses within everyone else's business as well. So the true business expenses, now there's many ways that you can get those out of what you've already been paying. Or if you're not quite set up yet, you need to have a pretty good guesstimate of what those are, but keep an eye on it and make sure that when your expenses start coming in, you sit there and you can rework it and make sure that you're covering everything. Your pricing needs to include tax and GST. Now, everyone's tax situation is going to be different. I'm not an accountant, so I cannot give you advice on that, but I will give you a general rule of thumb to work off. To find out your tax, there's things like the tax tables. If you're a sole trader, they are very handy. You can work those out pretty easily. And company taxes and things like that, definitely run it through the accountant. They should be able to give you a percent figure. Buffers, as I mentioned earlier, quiet periods, surprises, there's so much. And if you're a brick and mortar store, those surprises can be pretty extreme. So it's definitely something to have in there. So an example of this would be your wage. You want to take home $1,500, and I do use wage loosely. It is your take home pay. Most people, it won't be through a proper PAYG wage. If you're self-employed and a sole trader, it would just be your take home, but we use wage. Your true business costs come in at 500, tax say 500, and a buffer. So your required revenue is actually $2,800. So we've got a little formula down here, wage plus cost plus tax plus buffer, and that's what you want to remember. Service-based businesses and product-based businesses are completely different. So for service-based businesses, obviously you're working off billable hours. Generally, it's an hourly charge. Some will be a package, but they are still billable hours and non-billable hours included in those. You need to be able to be realistic, especially if you're running things on your own in a service-based business. And you've only got a certain amount of hours. You cannot outwork bad pricing. No matter how hard you try, you cannot outwork bad pricing. You're just going to burn yourself out and probably never sleep. So we'll get into the proper calculations later, but realistically, if you wanted a $2,800 take-home pay and you've got 25 billable hours in the week, that's a minimum of $112 an hour. If your service is $140 an hour, say, and that same take-home pay, you're looking at 20 clients a week. Do you really have the capacity for 20 hours of that? So that's where service-based businesses really need to work out their capacity. Understand that not all hours are billable. There is a lot of admin hours, back-end hours, whatever you want to call it, that you're not going to be able to pass on to clients in the traditional sense. So you need to make sure that it's accounted for in your pricing anyway. In both of these examples, if you were charging $70 an hour for your service, you would be underpaying yourself, and which would mean a constant cycle of trying to get out and trying to get on top. It's not possible. So for product-based businesses, it's a similar concept, obviously a different formula. We're looking at the required revenue divided by the product. The true profit per product is the units that you need to sell. So if you've got a selling cost of $50, but it costs you $30 inclusive of everything, your profit is $20 per unit. That's a lot of units that you need to sell in order to get that take home. If you're only selling a small portion of that, your numbers are never going to stack up. So this could be for a multitude of reasons. Your low margin, there may be ways for you to get out of that and change your pricing. There may be ways to save money, to extend the cost of your product, anything else, 100 different things. But realistically, you need to work it out from a backwards perspective. Start with what you want and work out how you're actually going to physically be able to get there with pricing. So the numbers will tell you the truth, and there's no denying that. You're either going to end up with not enough clients, not enough sales, pricing is too low, costs are too high. Your wage target is unrealistic for the current model. That does happen a lot, and that's where I say that pick your take-home amount as reasonable for where you're starting now, because if it is too high for where you are or unrealistic, there's nothing that we can scale out of that. Now, I want to stress the biggest thing though, it's not a failure. It's an opportunity for you to take a really good look at your business and see what the numbers are telling you. They're pretty black and white. It's A plus B equals C, and there's ways that you can change that number though, but they are what they are. So if there's too many clients needed, it's going to be a pricing issue. If there's too many units needed, it's usually a margin issue. Not enough left, it's a structure issue. The numbers do not lie. They just show you what needs to change. So a quick pricing reset. Choose a reasonable wage, add your true business costs, and really take that time to work out what your true business costs are. Do not try and shuffle those around. Use what they currently are now. If it ends up that your true business costs are too high, well, that's going to show up, and it's going to be a really good opportunity for you then to look through your business numbers and go, well, do we really need this? Subscriptions are usually one of the highest ones in there. People tend to jump in and go, oh, it's only $80 a month. Oh, it's only $20 a month. Oh, it's only this. But you have 10 of those running, it's going to get pretty high pretty quickly. You've got to allow for GST and tax, add a buffer, work out your required revenue based off those numbers, and compare it to your current pricing. I suggest everyone does this pretty quickly and just see where you end up. Sometimes you'll be great, sometimes you won't be. So there's free tools on this screen. Now, what I have created here is a service pricing calculator and a product pricing calculator. Again, as mentioned, these are going to be slightly different, but if you've got a service-based business, obviously use the service one. If you've got a product-based business, use the product-based business. I will show you what those look like as well. So this is my little calculator. It is simple, it is not perfect, but it will get you some pretty good clarity around your numbers. Now, this here is for a service-based business. And basically what you want to do is go and have a look in your accounting software, your receipts, your spreadsheets, however you're running things, and get some really good pricing on your expenses. What we're going to do here is just have a little bit of a play so that you can see how this pops out. So let's say that my desired weekly wage that I want to take home is $1,000. My monthly business expenses, let's say they're pretty low. I'm just starting out. This stuff is to include software, subscriptions, marketing, insurances, any business expenses that you take. Car costs, if you're claiming a car, your accountants and bookkeeping fees, your bank fees, absolutely every bit of expense that you can think of for your business. This auto calculates out based on an average rate to a weekly expense for you. And then this is here where we add in a tax and buffer percentage. Now, again, get proper advice from your accountant based on your personal situation. But a good rule of thumb is stick between 25 and 30% of your revenue. So that will allow for, sometimes you'll have a bit of extra money in the bank, or if your taxes are much higher than thought, you're going to not be too far off. So we put those ones in there as a decimal. I've got in here a 15% buffer for quiet periods, unexpected costs, or business pressures. And then what we want to do, total hours that you work, not just billable hours. Now, this is again for service-based business. There's a lot of admin. There's a lot of extra time that you don't necessarily get to apply directly to a client. So let's say that I work 25 hours a week. The percentage of billable hours in my work, I'm going to say 70%. Again, you'll have to use a little bit of a guesstimate there, but if you can look at your week and break it down to what you can charge and what is just back-end admin running your business, whatever, you'll be able to work out a percentage for that one pretty easily. The price per client or service. Now, this one is going to be a bit different. This is mainly for if you sell packages. But if you don't sell packages, you want to multiply the amount of hours by your hourly rate. So if you estimate that you're going to work 5 hours for a client at $50, well, there's your answer. I'll put in a service package of 300 in here. Now, the rest of this stuff in the middle here all gets worked out automatically. And I will explain what all this means too, because this can be quite overwhelming for people who aren't up to this sort of stuff yet. But it will auto-calculate most of the white ones. So your base cost to cover, that basically means what is the minimum amount based on the numbers above that you need to make in order to cover all of this. Your required weekly revenue, again, your tax allowance, your buffer allowance, your billable hours. So they're saying here that 70% of 25 hours, my billable hours is 17.5. So this pricing is going to take in the full 24 hours to ensure that I'm getting paid for my time at all times. Your minimum hourly rate. So this here has come back at 106.24 in order to make this stuff work. And I need to be servicing 6.2 clients a week based on this package. Now, if my hourly rate currently is $75, well, I'm losing money. I'm $31 an hour negative. So for every hour I work, I am losing that sort of money. Now, this is where you get to play and use and see what happens if I manage to reduce my costs by $100 a month. Well, that looks a bit better. What happens if I am able to add an extra $5 to my servicing? It's getting better again. So this spreadsheet is designed to A, work out where you are, and then B, see what numbers you can fix and alter until you get to a point where you're in the positive. Now, if I was to add in and just double my rates instantly, we're now sitting at a really happy pace. So we're $45 an hour over what we need to charge to cover costs, which is going to put us in a pretty good profit space. Now, there is, again, a multitude of things that you can be doing to reduce your expenses, to see if your pricing works. Service-based businesses, it gets really difficult because some of the biggest questions I get is, well, I can't charge that. Sure. In a lot of cases, you can't go in and charge $1,000 an hour if you're a cleaner. No one's going to hire you. But you also don't want to base your pricing on what the person next door does. You have no idea if they're profitable. You have no idea what their expenses are. You need to price yourself based on what your business actually does, how you actually operate, and to ensure that you're not going to get left behind. So again, if your pricing comes back and in order for this to get to some sort of positive number is exceptionally high, you need to go back and possibly look at your wage. You need to go back and have a look at your monthly business expenses and see where you can trim back. And this might be for a short time. This might be while you're still building up. We might need to reduce this to $700 a week to make this pricing work at $100 an hour. There is many, many things that you can do. You need to be realistic about your pricing, but you also want to make sure that you're covered because no one's in business to lose money. So the product calculator is much the same, but it is working off a unit per unit. So again, really simply, it is plug into the pink numbers. You want $1,000 weekly wage. Let's say your expenses are probably a bit higher in this one. I said higher, didn't I? $600 a week. Now, there are things like subscriptions, rent, marketing, staff, overhead costs. You need to pull your realistic numbers. Please don't just pull a random number unless you haven't started yet. Really try and drill down. The more accurate you can get these numbers, the better you're going to end up. So again, this works out your weekly expenses, tax and buffer. I've put the same percentages in, but if you wanted to change these, you can. If you wanted to have 25% buffer, it's just going to keep changing. So cost to produce or purchase your product. This is your unit cost from your manufacturer or how much you know it costs you to produce an item. Let's say $5. Packaging costs, let's go $2. Shipping contribution, this is not what your customers pay. If they pay for shipping, leave it out. This is for the shipping costs that you actually absorb for your customer. So let's say shipping's $15. I charge customers $10, then I'm going to put $5 in here. Payment fees, they're all your merchant fees. So let's say it's $2 a product. The total cost, the true cost of this product is costing you $14 every time you make a sale. So that's a far difference from the $5 that originally it was. Now, let's say your selling price is $35. You've got a $21 profit margin in there. And here, how many products are we currently selling? So this is where, if you're brand new, it's going to be a bit eye-opening because if you are only selling 5 products a week, you've got a gap in your units of 115 that you need to sell in order to make the money that you want, the business expenses, and everything else. Now, if you were to sell 500, you're sitting pretty, real pretty. But is that realistic? It's all good and well for a profit business to say, I want to sell 500 units. But what is the reality of where you're at now and where you could be in the near future? If you're scaling, great. Make sure you add those extra marketing costs up above because generally if you are trying to scale, your expenses do go up as well. So make sure that you always keep these monthly business expenses as well as you can. And this here will show how many units you need to sell. Now, one of the biggest thing with product-based businesses, if you're sitting really far out of whack and you've got a huge gap in units where you need to sell and it's not getting there, this is where we need to start looking at the cost of the products. What money can you save? This isn't always easy. I had an e-commerce business and it's not easy, especially when things like minimum order quantities can be excessive to get a very small discount. Shipping is always an issue, always an issue. And considering everything that's going on in the world, it's getting worse. So a lot of these things can't always change. But again, your monthly business expenses start there. What can get dropped out? What can be paused until you're in a more profitable spot? A lot of the software subscriptions are really high. So that is definitely a big one. Marketing, if you're growing, it should be working. But again, if you're spending a lot of money on marketing and not getting the sales back, it's something to consider. Staff and overhead costs, all of that. So again, you can sit here and play with these numbers. You can work out all the change. If I could get this to $4, what does it do? If I could get that to $1.50, what would that do? If I pass on the full shipping costs, how does that affect everything? So you can see now, without changing anything else, we have gotten closer. Still not there yet. And again, you might have to consider your weekly wage for now. So all of these things, it is designed to play. It can be used now. It can be used in 6 months. It can be used in 3 years. And it is definitely worthwhile always coming back to this and just seeing where you're at, making sure that your pricing's aligned and making sure that you are getting paid for your job, because that is very important. So I will leave this here for now and we will jump into some questions. Or Lia, if you've got anything that you want to ask. Lia?
Does anyone here
Oh.
live have any questions for Sofie? I know a few of you missed the beginning, but I could see you furiously taking notes. It's
There's a
definitely
few more people in the room now. Hi. I couldn't see you before because I've got a full screen on.
Yeah, does anyone have any questions about what Sofie shared with us? No. Okay, I have some down here. You can just pop your hand up if anyone does. So, Sofie, I think you've gone over most of them. If we can't get as many clients or sales as we need to make our take-home pay, we just have to look at reducing it or reducing the expenses.
Yeah, and look, it's a really tough one because, my biggest thing is people get paid, but you've got to be reasonable. Like, you've got to set a reasonable target, and it is something that can grow. So start off with a figure and then grow it and use that as a way of, the other way to use it, and I love this, is I want to get $2,000 a week. So let's reverse engineer it and work out how many clients do I actually need in a service-based business at what price to get to that. So you can use this spreadsheet in multiple ways just by playing with the numbers. You can put your desired take-home pay really, really high and then see what it is actually going to be and go, great, that's my new target. But for now, this is where I'm sitting.
And you can also use it to set your daily KPI so that you can reach
100%.
those targets then. Once you've got those numbers and you know your numbers, it gives you what to go aim for each day. So Sofie's been really generous and she's sending us the links to these for us to share so that we can use them to help get some realistic targets and some goals for where we want to go.
Yeah, and KPIs is a really big one. And I think, if you can, when you download that sheet, you can add anything else to it. But I would strongly suggest having a little table in the corner and going, right, this is what it is at the high side, $3,000, $4,000 a week. This is how many clients I need at this cost. Then underneath it, drop it down by 1,000. And then you can actually sort of see your little goals that you're working towards and keep the main sheet as where you're currently at. And when you're in a place that you can increase or you can decrease your expenses, you can see visually where you're working towards, and definitely have it as a bit of a step system.
And then I know a few of them would have missed it in the beginning, but percentages for tax. Sofie can't give exact pricing for taxes. You have to speak to, obviously, your accountant for that. But she did suggest using a buffer, I think, of 25%.
Yeah, 25 to 30%. So obviously, if you're registered for GST, you've got a 10%, but there is credits and you get money back as you're paying GST. But generally speaking, if you just save 10%, you're going to be more than well off, and you'll end up with a bit of extra cash at the end of the quarter, which is always great. And it's the same for tax. You're obviously going to have expenses that come off your taxable income. But again, 25 to 30%, mash them together, you are going to be sitting pretty good. Your accountant can give you a better figure, but 25 to 30% is what I tell all my bookkeeping clients.
Does anyone else have any questions for Sofie?
Everyone's a bit quiet.
Yeah, everyone's super quiet.
I'm not
Okay.
scary.
No, this has been fantastic. I am so thrilled with everything that you have shared with us, and I'm really excited. I love Excel, so I'm really excited to jump in.
Oh, I love a good spreadsheet.
Yeah.
But I just really do want to say, just have a good play in it and be really honest with yourself about where you're at now, where you want to be. And then you've got to work out how to get to those two. I can't help you significantly on that one, but there is going to be different paths and there's going to be different ways. And some of it's going to be number related. Some of it's going to be pounding the pavement and knocking on doors and trying to get those clients in, or selling those products. But definitely just have a play and have a little bit of a dream too. I use it for myself, for every business that I have. I sit there and go, right, this is my absolute dream. This is my next down, and this is my next down, and then this is where I'm at. And it's a really good motivator to get to where you want.
Thank you so much for your time, for your generosity in being here and sharing this all with everyone. If no one has any other questions that they want to ask, there's nothing else that you want to add in. At what stage should people look at getting a bookkeeper once they've...
Look, to be honest, and look, a little bit biased, but earlier the better, because what people don't understand, and a little bit of a downfall in the industry, there's a lot of bookkeepers out there that just reconcile your transactions. That's not a bookkeeper. It's not. Your bookkeeper should be there being a financial strategist with you in their own capacity. Obviously, again, not in the accounting world, but they should be able to sit there and work on these numbers and you go, hey, there's something doesn't feel right. They should sit there and look at your numbers and go, your cash flow is pretty bad. Let's shape this up. Your profit's not there. Let's shape this up. Or I have a lot of tradies that come to me and want to buy a new ute come end of financial year because they think they're saving lots of money. And I'll be like, stop. You actually don't have the profit for it yet, but hey, let's tighten some things up and then you can go and get your shiny new ute. So a bookkeeper should be working with you, and a good bookkeeper is invaluable at any stage. Obviously there's costs involved and it's not going to be for everyone at everyone's starting out point, but the sooner you can get into one that's good and does more than just reconcile your transactions and lodge your bases, definitely the better. But shop around.
Fantastic.
Definitely shop around.
Thank you again. It's been lovely talking with you and sharing everything. I will be sending out, we'll do a page where people can access all of your links. Was there anything you wanted to share from your business before I close?
Look, I am actually creating at the moment. It's a bit behind, but I am getting there. A DIY bookkeeping course. Now, it won't be how to use Xero because you can search the internet for that. There is plenty of YouTube videos and tutorials on how to use accounting software. This is more on how to understand numbers. Again, it is my passion, helping business owners actually understand what their numbers mean, not just seeing a report and not understanding what those numbers mean or how they affect your business. So it's much more a deep dive on that. It is explaining every little aspect of the bookkeeping realm and helping business owners get a lot more confidence on using their own numbers. So that is coming soon.
Love it. Numbers never lie. They
I'm a
shape
bit of a
everything that you
perfectionist.
Fabulous. Thank you so much again. Thank you for everyone that joined us live. It's been lovely to see your faces. And yeah, we will chat again soon.
Awesome. Thanks.